economy, but luckily we've done pretty well locally. I'm Sandra from mytobymycity.com, and today I'm going to be wrapping up 2011 and looking forward to 2012 with Peter Cooper, the editor of ArabianMoney.net. Hi Peter, how are you doing?
Good.
Welcome back. Welcome back to the show.
Thank you.
So what do you have for us for 2011? How did the economy do worldwide? Let's start locally. How did the economy do locally, and which industry did best and worst?
It was an unusual year this year because the Arab Spring happened, which is something that we just didn't predict at all at the end of last year. That had quite a strong impact on the UAE economy in particular. People coming here with money to spend, first as tourists, and then some of them became residents as the year went on. Some moved their families. There were multinationals brought families back as well to the relative safety of the UAE. That gave the economy a boost. At the same time, oil prices stayed much higher this year than anybody predicted a year ago, and that has brought record oil revenue for the country.
On one hand, we've had the real estate market in Dubai pick up fairly well, but on the other hand, the stock markets and banks are again pretty much dead. What do you have to say about that?
Well, you're quite right. I mean, the financial industry locally remains in depression, as it does worldwide. That's a sort of general phenomenon, and the stock markets here have stayed very low and have moved lower this year alongside the global markets. Really only the US market has kept afloat, and even that is down for the year at the moment. So, you know, stock markets, are they telling us about the future, or are they telling us about what has just happened before? We'll have to wait and see on that, I suppose.
We've done pretty well locally, but if you look at Europe and global economies, that's not looking very good at all. Could you tell us what can we expect going forward in 2012?
Europe is heading into a recession. It's a question of whether it's a mild one or a deep one. If they keep printing money, and there are some hopeful signs today of a release of money by the European Central Bank, that should support the oil price and the economy going forward. If we're fortunate, we should see this $100 oil price continue through next year, which will keep, you know, the recovery afloat here, and we should do possibly even better than this year.
So you could say we're still on the brink of a double dip this year as well.
Yes, I think that's true. Possibly the United States is less likely to have a double dip now, but certainly Europe is falling into some kind of recession. Japan is still pretty much there. China is slowing down. You can't call it a recession when it's still growing at sort of 7–8%, but maybe next year, you know, that's another worry on the horizon, that China could be sort of slowing down as well.
And by what time next year would you be able to tell exactly, you know, all right, we're in a recession or we're not in a recession, we're in recovery?
Well, I think by the spring next year, you'll know pretty well how the land lies. The first quarter is particularly difficult for Euro bonds, and there's a lot of refinancing to happen. If they can get that through, and some of these structural changes that they've been talking about begin to work, that might tide us over this period. But it's still touch and go. You know, it's a sort of 50-50 thing with the Eurozone.
Great, excellent. Thanks so much for having us, and wish you a happy new year.
And to you too, and all the viewers.